welcome to Modern Business Accounting Principles. In this episode we are up to chapter 16 and we're going to cover off two chapters because they're quite specifically written for big businesses, and big business is not who I work with. Just remember, this is copyright 1936 Alexander Hamilton Institute, so the content isn't necessarily going to reflect quite where we're at with accounting today. So in chapter 16, Modern Books of Record, we first look at the classification of the accountant's function. So the accountant has two distinct functions in a modern business organisation. In one capacity, she is charged with the duty of analysing all the transactions and occurrences that in any way affect the financial status of the enterprise. This is the theoretical or analytical part of her work. She is also in charge of the office personnel engaged in recording the great mass of detail connected with business transactions. In this capacity, she is an executive directing an operating organisation. I'd suggest that most businesses don't really have a great mass of detail that needs to be recorded by a great mass of people, and the accounting functions have shrunken in size significantly since the book was written in the 1930s. But up until this point in our discussion, we have been concerned primarily with the first of these functions, so the recording and analysing of transactions. The fundamental principles of accounting analysis have been illustrated by the use of the simplest record forms. This method was used to keep the attention focused upon the broad questions of accounting analysis. It is essential to have the structure of an accounting system as a whole clearly in mind before one can discuss intelligently the application of specialised techniques. So that is what the next two chapters go into. They go into specialised techniques, particularly for large businesses. So as an executive in charge of the office force, and that's the second function of the accountant is concerned with the problem of devising forms and methods of procedure for the prompt recording and classification of all data. It is her function to keep the costs down to the lowest possible point. And that's something you see even today, and it's not just accounting that drives for efficiency, it's pretty much every industry drives for an efficiency. So we go into various ways that the accountant as an executive can look to increase efficiency and therefore productivity. So there's ways to divide transactions and divide bookkeeping labour, because it would be impossible for one bookkeeper to record all the transactions for even a moderate-sized business. If the old form of journal and ledger were used, there would be no opportunity to subdivide the work. So the introduction of special journals affords some relief. And we're going to, if you remember bookkeeping back in the day, and you probably wouldn't remember, but those movies where they show you bookkeepers, it's books, like books, hard-bound books. And how do you share a hard-bound book? You can hardly have multiple people working on a hard-bound book at the same time. So we go into working in more specialised books. So rather than having one book where everything is recorded, the book itself isn't split, but the requirements and what's recorded in the book is divided. So you can classify transactions in various ways. So you may have a sales journal is one example, a purchaser's journal is another. You may have books specifically for certain types of expenses so that one person can focus on a certain type of expenses. And you can divide them in a number of ways. You can divide customers into individual books. You can divide assets into individual books rather than having one long book of everything. You can also add in special columns. This is option number 3. To save time and expense, transactions are classified according to one of the accounts affected. So you're just adding in columns so that when you are recording information, you're not recording it in as many places. You can also develop specialised ledgers. It has been assumed in the discussion so far that all the accounts are kept in one ledger. In actual practice, it has been found necessary to subdivide the ledger for the same reasons that caused the introduction of subdivided journals. Again, I'm going to say that this problem of subdivision has mostly been overcome by the introduction of software, because we don't have to have individual people working in individual books. There is the development of a control account, so if you are splitting out your bookkeeping labour force and work tasks, you'd obviously need to have some sort of control system. You can split out your sales ledgers and credit control accounts, and lots of different ways to separate them. But we're talking about control accounts. I'm going to say it is a good point to remember that you should introduce some form of controls in your system. So if you do add users to your bookkeeping software, what are they doing? What do they have access to? Can they edit, or can they only view? Because you don't want them to be accidentally invoicing from your account when they should be invoicing from their own account. So then if we introduce a control account, we have to put in controls around the control account. There's lots of different ways that you can divide labour. And one of the modern books that was introduced was a petty cash account. So if you've not worked in a large business, you may not know what a petty cash account is. So the petty cash fund is a practice that most concerns, It is the practice of most business concerns to deposit daily in a bank all cash and cheque received, and to make all payments by cheque. 1936, remember. It is inconvenient, however, to draw separate cheques to cover small expenses such as postages, telegrams, tram fares, etc. In order to eliminate this difficulty, a special form of the control account device is used. A small fund of cash, say £5, is handed to a petty cashier who is responsible for such payments. So petty cash, it's a small amount of money, and it's probably not going to be £5 or $5, that's used for purchasing just small amounts of small value items, leaving cards, or train fares, or something really small that you've probably under the credit card limit, so under that $10 minimum purchase. And you put the cash in a drawer and make the necessary payments and keep the necessary records. I'm going to say that a petty cash account is a good idea sometimes if you are making payments by BPay and that sort of thing, to keep an account so you withdraw money from the business rather than always dipping into your personal funds. So you withdraw whatever it may be, $100, and then you have that cash that you can use to buy for the odd things that come up, rather than using your personal money and then having to transfer the money back from the business to you as a person. So in summary, this really hasn't been that long of a chapter because it's very specialised. Although, according to the book, these specialised books and methods described in this chapter are typical of those found in use in the average business office today. They may be indefinitely expanded and altered, subject of course to the limitations of the fundamental principles of the double entry system of keeping records. And we're going to go into some more intricate forms with a great amount of technical illustrative material, which certainly sounds like something to look forward to. So let's just jump straight in to Chapter 17, Specialised Records, and rip off that band-aid. Now, I will say Chapter 17 is slightly more interesting than Chapter 16 was. There are certain peculiarities about every business that require special consideration in the accounting records, and that is certainly as true today as it was in 1936. It is impossible to set forth any one system of records that will meet the needs of every enterprise, or even to standardise the forms used in any one line of business. Every businesswoman has a notion that her way of doing things is entirely different from that of others, and exactly how people perceive business, that everything is entirely different from that of others, but it's really not. This is undoubtedly an extreme view of the situation, but it has some basis in fact. In other words, there is a certain element of individuality in the conduct of business. These differences are expressed expressed in accounting by adapting the forms and records to the peculiar conditions of the specific enterprise. This does not mean that accounting principles differ in any way in their application to individual cases. The principles of accounting are fundamental, have the same meaning and significance to all types and forms of business organization. It is merely the method used to gather the data and to prepare the statements that are subject to variation. And really, the main difference is going to be in which accounts are used. So a haberdashery account for a jewellery business is probably not appropriate, but a haberdashery account for a seamstress or for somebody that makes clothes or for somebody that makes sewn accessories, bags, wallets, travel toiletry cases, whatever it may be, would be appropriate. In the preceding chapter, we considered in a general way certain modifications of journalising and posting methods that have been adopted by most modern business concerns. And then we go again into detail on how to use some of those adaptations that really don't have that much use in a small business. And even when they are used in a big business, they're not used in the way the book describes anymore. There aren't books in the same fashion, there aren't ledgers in the same fashion. So these modifications are often then actually built into the accounting software. So when a big organization purchases or licenses in an accounting software, they get a standard set of features. They get the accounting fundamentals and principles. From there, they will work either in-house or with the software supplier to make modifications that actually suit their business. So they may need particular subdivisions of accounts, they may need departmental segregations or regional segregations, they may want information to flow to particular managers at particular times. Those sort of requirements are they then actually built into the software. But we can cover special journal forms, the special column journal, in detail, sales journals used for statistical records. So the sales journal of a relatively small enterprise may be used as a book of statistical records as well as a posting medium. Merely by adding special columns, you can break that out to departments. And that is something that is done. So in a small free accounting software like Wave, that's not necessarily an option, but some of the paid softwares, that certainly is an option. You can add a department if that's relevant to your business. If you did want to achieve that in Wave, and I'm just going to say this here, if you do have, say, two main, not products, but sales or services, or if you sell a product and you sell a service and you want to be able to separate those two, my suggestion would be that in naming the accounts, you add that identifier to the beginning. So let's suggest you want to separate your online sales for a product business from your offline sales as a product business. All you would really need to do in Wave is you add the word online at the beginning of the expense item. So if it's online Etsy fees, online sales fees, sales processing fees, online advertising for if you're doing like Facebook adverts or Instagram adverts, and then you have your equivalents in online sales. So you'd have online Etsy sales, online own sales. Then for your offline, you just put the word offline at the beginning of those same account names. So you'd have offline sales, markets, offline sales, wholesale, offline sales, consignment, and then you separate again your offline expenses. Now, you're not necessarily going to be able to separate every single expense into an online and offline version. So there will be some, say, business cards. If you use business cards at markets in person and you put business cards in your packages that you sell online, obviously that cost is between them, and there's probably not that much in terms of value in actually separating the cost of business cards between online and offline. So you just have to accept that some costs are shared costs. Where you can be more specific, you are able to be more specific. We go into a voucher system. So if you really are a big business, voucher system is a way of ensuring that purchase orders match deliveries that have been correctly authorized, and it's not complicated, but it's really not that relevant if you're a one-person business, because the person ordering the goods is the person paying for the goods and the person receiving the goods. They are generally the same person. But there is an example, if you want to see, of a voucher register where you can add lots and lots and lots of information. There's also ways to allow for purchases, returns and sales returns. And then we get into what is probably one of the most intriguing aspects I've actually come across in the book, which are private accounts. There are cases in which it is considered important to keep strictly confidential certain information concerning the amount of profits earned, and to segregate this information for the exclusive use of one or more of the executives of a concern. A device known as the private ledger has been developed to meet these needs. This ledger is kept either by one of the executives or a confidential clerk. A private ledger. It just sounds so much fun, and I've honestly never come across a private ledger. I've only either really worked with sole traders or with like a big public business, so I've never had the opportunity of a private business that is able somehow to keep confidential their financial records. But it does sound like an intriguing aspect of working with accounting. Going to then closing the books when you've got private accounts, and how it is you manage to keep your profit or your assets or your liabilities a secret. And then in summary here, so a sufficient number of illustrations has been given to demonstrate the possibilities for adapting the conventional accounting records to meet the needs of business in unusual situations. Practically every business has some particular type of problem that can be solved only by a specialized accounting device, or by adaptation of the accounting device that you use. There is one aspect of this situation that should be emphasized, however, and that is the fact that the fundamental steps in the accounting process are always the same, no matter what adjustment may have been made in the forms of the records. Provision is always made for the classification of transactions into debit and credit elements, although software handles that these days. The posting process is accomplished in some manner, also handled by software. A trial balance is prepared, also handled by software, and the accounts are closed and the formal accounting statements are prepared. And you can guess that I'm going to say in your accounting software. It is clear that the old forms of journal and ledger are giving way to these newer specialised records. Not only are the forms of the books being changed, but entirely new labour-saving devices are being introduced. Now that is what the next chapter is, labour-saving devices and machines, and it is very much showing how old the book is. So we'll get into that in the next video. So until then, thanks for watching Modern Business Accounting Principles. If you do like this video, hit like, comment or subscribe, and I'll see you next week.